we need to dive into some
inflation.
actual mortgage stuff, Igor. We could talk to you about this stuff all day, but
Sure.
we had a lot of people reach out and be like, "Oh, I like that Igor guy. Like, I might want to
That's
talk to him
strange.
and blah blah blah, and get your contact info."
Don't stretch it, Chandler. They were like, Igor was okay.
What do you think? Like, say someone's out there and they're thinking, be it residential, be it small scale rentals or commercial. What should they do before they even call you? Have a job, have some money.
Well, yeah, I mean, have like if you look at a mortgage application for any type of property or product, like you can kind of simplify it to, I always go over income, down payment, and credit, right? Like, you kind of need to meet some criteria in these categories. Now, they're very different criteria whether you're buying your first home versus an apartment building, but like you kind of need to some degree check each of those boxes. Credit, you have to have good credit. It's your report card, as we say, to represent how well you.
What's the bottom end?
Well, it depends again on the type of lender and the deal. Like for a traditional bank to look at a single family home mortgage, 600 is kind of the cutoff low end.
B lender.
B lender, like some of them go into like the high fours. But that's
Neal's asking for a friend.
Yeah. But those are, tough scenarios and that's not really a part of our business, to be honest.
Yeah.
But like stuff in the fives, like a B lender will do that, no problem.
Okay.
Ideally, 700 and up, 800 and up would be phenomenal.
Now, a lot of people don't know their credit scored. Like, do you put any stock in these ones? Like, submit your credit online? Like,
very little.
Yeah.
Because we always end up with a different score. We've never got the same score as someone said they saw on their online banking app. So,
are they usually kind of close?
They're good at
idea?
representing like if you're in good shape or not. You know,
okay.
But the score itself too, people get too caught up in it, especially when it's a good score. Like if you have a 750 or an 800 or an 850, it honestly doesn't matter anymore.
You're at the top tier anyway, so
There's
it's irrelevant.
nothing you can get with an
You're not getting
850
denied for
that
any
you
product,
can't with an 800, right? So So there's kind of there's a point where it's like, yeah, it's great, good for you.
And your rate doesn't fluctuate based, like with cars, your rate fluctuates based on your credit score.
Yeah, and how the finance manager feels that day.
And how exactly.
But
mortgages does not do that.
Only like more so for B lending. So just I guess to clarify that. So with residential financing, there's A lending, which would be like your banks, your lenders when you have good credit, all of your criteria kind of checks
Your
the
TDs,
boxes.
your CIBCs, your top tiers.
Yeah. And then there's what's been traditionally called B lending. I like alternative lending. I think it sounds a little better. Yeah. And that's for people who don't meet the criteria of those traditional banks.
Your credit unions and things like that.
And sometimes
not even like credit union would still be an A lender.
Are
actually,
they? Okay.
Yeah. B lending, it's like they have different rules.
Yeah.
Credit union still has the same rules. They're just more flexible with them.
Yeah.
B lending is just like different criteria. So that could be for someone who's newly self-employed. That's tough for the banks to deal with. That's a common one. Or someone who's self-employed and doesn't report much income, but can truly afford things. Alternative lenders can look at their income very differently. Like they don't go by tax returns; they do it in a different way.
Yeah.
Or it can be because of a credit challenge, right? So there, if you have, I don't want to say bad credit, but if you have, subpar credit, then the lower your score, the higher of a rate you're getting.
Yeah.
Also, some of the times people have no credit. I mean, somebody like, oh, no, I'm super great. I don't even have a credit card. It's like, that's actually not going to help you potentially.
Right, because you need to be able to show that you've managed credit well when you go and apply for a mortgage.
Or new to country.
Yeah.
Well, you may not have credit in our country. Like you
that's
get
a bit
credit
different.
transfers, though.
Right, that's a bit different because you can get, there's new to Canada programs. So if someone's reason for not having credit is because they just got here, banks have specific programs for that, and we do a lot of that business just by happenstance. So,
and you can help a lot with that because I've had a few times where I've had new to Canada and we've gone to just the banks directly, without knowing, and every bank handles it differently.
Yeah,
and so we've been denied by one like standard bank, and then you take that exact same app to another bank, and they're totally okay with it because they have a new to Canada program, so they're willing to work with those items.
That's right.
And so I remember we lost this one specifically. We lost a deal on a very nice home. Purely not because they couldn't afford it, but they got denied, and we weren't able to get the extension to go to another bank.
This is why you need a broker because
it's in the
presentation. It's in the presentation.
Well, the broker would know who
to approach.
Yes, setting up the right line.
Exactly.
Yeah.
But you can get, some countries have international credit reports that you can get. We just got one for a mutual client with you from Germany. That was the first time I've ever.
Was that the one that needed to be translated?
Yeah, it had to be professionally translated, but we did it all up front. Got it all, and it's approved, right? Good to go.
I always try to tell people with all this stuff, like, know yourself. Like, if you're thinking of getting a mortgage and buying a house, take a quick second to assess yourself. Like, all right, do I have some liquid cash?
Yeah.
Am I paying myself, or am I claiming all of my income? And further to that, like this time of year, people have to start thinking about, all right, depending on when my approval happens and how far I go into the new year, are my taxes up to date?
Right.
Like people need to look at a few of those things maybe before they call you, and you would help them with
But I
all
mean,
that.
calling, I don't know if it's ever too early to call, because we have clients sometimes reach out saying, hey, I want to buy a house a year from now.
Yeah,
and
that's
I
true.
and I want to know what I don't know so that I can prep towards
Get your
that.
ducks in a row.
So like to
Yeah.
this question of what they need to do before calling, I don't know if there's much to do before calling, but maybe have like somewhat of a realistic expectation by knowing yourself. To
Yeah.
your point,
Yeah.
but again, even that, like people don't know how to create that expectation. So
That's true.
So just
Yeah.
call.
Going back
you
to
know.
the credit thing for a quick sec, I've said this to a few people, and I've heard this before. Like opening a line of credit against your home, even with no intention to use it, that's not a bad. Like that looks good on your credit, does it not? If you're like, I have $100,000 line of credit against my house, I don't need the money, I'm not using it, but it's open, and then on your credit profile it shows that you were able to kind of basically handle the debt.
Yeah, so there's 2 points there. So with any, whether it's against your home or just a personal line of credit or
Whatever it
credit
may
card,
be. Yeah.
So the 2 biggest driving factors of a credit score are making your payments on time, and everybody knows that. But the second one is proportion of balance to limits. So if you have a credit card with $5,000 balance, or sorry, limit, and you owe $4,000 on it, you are 80% utilized.
Yeah, it's a bad look.
That's a bad look. The closer to maxed you are, the worse it is.
Yeah. Yep.
If you get those things saying, hey, we've pre-approved you to increase your limit. If you take that limit increase and now you've got a $10,000 limit and a $4,000 balance, it's the same $4,000, but you now owe 40%.
Better look.
And your score will increase.
New
Right?
card, new me.
Overnight, right?
I remember
So-
talking to you about this early on because I was like, all right, I got this $5,000 credit card. And I'm like, hey, I've got it like paid off. Should I lower my limit down to $1,500? Because I
Right.
thought that would be me being responsible. And you were kind of like, no, keep the limit at 5,000, but just keep it paid off. I thought, just assumed like, well, let me lower the overall potential balance. But that actually wasn't good for my
No,
credit,
'cause-
which is also how the bank gets you.
Right.
Because they're like, oh, the more credit
Well,
card
So
potentially
so
you have,
then
like,
the trick is not to go and spend the money.
yeah.
But-
Get the card and snip it up kind of deal.
But
Yeah.
what's interesting, so you want those limits to be high actually so that your proportion looks low, right?
So take
But-
the HELOC.
Right. But there are a couple of banks that when they crunch your numbers for your next application, they will look at your HELOC. So HELOC is a home equity line of credit. They will look at your limits on those and calculate your numbers as if you're maxed on them.
Right.
Which is absurd because you owe nothing and might have a
It's
limit of a few
potential
$100,000.
debt, though.
Right. But you haven't used it, right?
Yeah.
So why punish you as if you have? Or then do it on everything. Like those banks won't do it on a credit card.
And you'll see
Right,
that sometimes,
yeah,
like you
right.
say, when you go to buy, I've had this happen where they're like, you need to pay off this credit card, this line of credit, and then close it. I've even had to close one.
Yep.
I think when I took a mortgage from the same company that I had a HELOC with,
Right.
they're like, we'll give you this mortgage, but you have to close the HELOC. Like, we
Right.
need
Or
you
I've
to
had
close
ones
that
that,
line
like,
of credit.
pay it off, and then like you can do whatever you want with it after that.
Yeah,
Like,
that's usually the
That's
approach.
usually, yeah.
But or they'll tell you to close one from a competitor, and then magically they offer you one next week.
Yeah,
right.
yeah,
Like
yeah.
it's just a game.
It's a business at the end of the day.
I love
That's
those
right.
moves. I love those moves.
When I was broke, I had rich habits. When I was broke, I had rich habits.